Well done. Hi boys and girls. I'm going to talk about money and how much trading can actually make you today. So, Winky's making the coffee. Let's roll the intro and find out. Hi, welcome to the channel. If you haven't been here before, my name is Langers. I am the Scruffy Trader. And as you can hear in the background, that's little Winky, supplier of coffee. Thank you very much. Beautiful as ever. So, what can I say, guys? You just can't work with women and children. Well, I can work with Winky. Fit us out. Anyway, sorry. She is the supplier of coffee, and we all know Scruffy likes a coffee. He likes trading as well. Why do I like trading? Because it's my job, and it's how I get paid. And I'm going to do a breakdown of how I make a wage in trading. It's a revisit to a compounding plan I did a while back. But it's a question that's raised time and time again. And it was raised again yesterday by Janos from Athens, of all places. International. It's the fact that I'm getting asked questions from all over the world just astounds me. It really does. So I genuinely thank you for it. And as the word is spreading, please subscribe and let's build some kind of community, because it genuinely makes all of this worthwhile. Anyway, I digress. So what I'm going to do is I'm going to jump on the screen and I'm going to show you how I break down positions and how those positions are then turned into a wage. Because too many times the industry is portrayed as get rich quick. You all think you're going to be the Wolf of Wall Street. You're going to drive your Lamborghini. Yes, I got one in. This horrible monstrosity.
Make it stop!
There is only one car you want to be aiming for, and it's a Mercedes. Sorry. What you should really be aiming for is a realistic expectation. And the expectation is simply that it's a job. And if you look at it as a job, it'll pay you as a job. And I constantly tell you that. You know, when I see these glossy videos and one thing and another, and I've said it before, it genuinely does grieve me, because I know you're setting the bar too high for yourself. And what that does is it gives you an expectation that you can't achieve. And if you can't achieve it, it deflates you. And the moment you deflate, you give up and it doesn't become fun anymore. But if you have realistic goals and you achieve those goals week by week, suddenly you'll find at the end of the year, all of the hard work and sacrifice that you've made has been worth it. Because the biggest thing with trading is the failure rate. It is massive. You know, I mean, the brokers that I use 3 brokers, and they all have roughly the same failure rate. And it is around 70%, 70 to 75% absolutely fail. And then when you're getting up into the traders that make a living from it, it's 10%. You know, only 10% of traders can actually manage it. But I think if you put a little bit of thought into what you're doing, that could be made a lot greater by not watching the Instagram and the land of make-believe and just treating it as a job. So let's jump on the screen and I'll break it down for you, and hopefully it'll make a little bit of sense. Let's see you on the screen. Okay guys, so what I'm going to do is I'm going to take you through a little bit of a spreadsheet that I use pretty much every day. And it's also going to show you the anatomy of how I make up my wages and why you kind of get a curve like that. You see, that's not a straight line all the way up. Through April, I had a good month and my bank balance increased. Had its wobbles, as we all do. We have ups and downs, you know, because some positions are not as good as others, but that's a decent equity curve. So I'm going to take you through the spreadsheet and basically show you the breakdown. Okay, so let's move along. Okay, guys, so like a lot of business owners and people that deal with numbers, I live on a spreadsheet and I kind of work everything out. Nothing I do is ever done on a whim. I calculate it, I look at it, and then I'll make a decision based on the facts that's in front of me. And what I use all the time is a spreadsheet. It's a simple tool. They don't take a lot to knock together, but they give you a lot of information because they show you it clearly. Now, everything's mooted around. If you can do 10 pips a day, 50 pips a week, or points, or ticks, whatever you want to call them, you'll make a wage. Well, you can. And I'm going to show you that right now. Okay. Now, I aim just for a wage. I tell you this, and a decent wage in the UK is 40,000 a year. And that's roughly what I work to. Okay. If I do 40 grand a year, I get a good holiday, I go for a meal when I want, and I can save a little bit. So it's as simple as that. All right. Some years I do a lot better than that. Other years I get around there. But if I do that as the bare minimum, then I'm happy, you know. And that's what I'm working on, because you'll often hear me say I'm looking for 150, 200 quid a day. Well, if I do that, that's about 40 grand a year, you know. And going back to the start of the video when I'm talking about expectations, if I only expect that and I come in at 50,000, I'm elated, you know, I've done really well. But if I set the bar at 100,000 a year and I come in at 40, then my expectation is deflated and you think, that's crap. But it's not crap, because 40 grand is a lot of money. So that's kind of the way I look at it. So let's look at the anatomy, but how you have to break it down to get to earning that sort of salary. Because as we say on the Land of Make Believe, they have you thinking you're going to be doing this within a couple of weeks. Well, I'm going to show you that it doesn't happen. All right. But in 12 months, that's a different story. You give yourself a year at trading, you can break the chains and stop working for the man if that's what you want to do. You can have nest eggs if that's what you need, but it can be done, you know. So let's have a look. So there we are, 40 grand, right? And I'm looking for just 10 pips in one day. And this will all make clear when I go on to the next spreadsheet. So I have to pull this down till I hit the 40k mark. That is there. Okay, this section. I'll just color it so you can see it there. So what that's telling me I have to do, 10 pips a day, it's £17 a pip. All right, that'll give me £166 in a day, 833 a week, 3,300 a month, 40 grand. That's the maths. All right. And if you look across, it's telling you you need to take one trade a day, because that's one, and that breaks it up. All right, that breaks it to the actual point of that figure rather than just simply 40k. If I was on £10 a point up here, okay, I'll color that one as well so you can see it. All right, I need to achieve 16 pips a day. All right, to get to this target up here, all right, which is 1.6 trades. So I have to take 1.5 trades to get to there, all right. But if I didn't, and I stuck with my 10 pips, and that's all I was taking, then that's what I would get. I would get 25 grand a year. All right. Hope that kind of makes a little bit of sense. All right. So that's the first thing that I look at in this. I look at where I want to be and how I need to get there. But that's assuming I have 100% strike rate. All right. Nobody has 100% strike rate. Mine's pretty good, you know, and I'm very proud of what I do. But what you got to remember is I've done this a long time and I know what I'm doing. All right. My starting grid is 50-50. All right. And I know you'll be scratching your head going, 50-50, what? Right. I'll explain that a little bit. The second I press that order button, nobody, and I mean nobody, knows if that's going up or down. They really don't. So on the point of pressing it, it is 50-50. Because I could be so unlucky, I press that button at the moment of a black swan event and down it goes, or up it goes in the opposite direction. We just don't know, you know, because it's the future. So what we then do is we look at the past to see if we can guide the future by getting clues as to what may or may not happen. And that starts increasing the edges a little bit. But if I start at 50%, I know I have a 50-50 operational chance the second I press the button. So my pip size to get to 40 needs to be double 100%. And that's kind of the way my head works. And that's why you often see me at 25, 30 pound a point. You know, it's just double of where I need to be. Okay. Because I assume I'm going to run at 50%. That's kind of the silly way that my head works. And it is an overview. Because I know you'll have the mathematicians going out there, you do this and that's bollocks and one thing and another. It's all it is just a guideline. All right. It's not set in stone. So that clears that off. So the next part of where I go to is you must have a plan. And your plan can be whatever set of rules you put in place. And you have to implement that plan and record it in a journal. And I'll go on to May because I haven't started it yet, because it won't start it till Monday. I dropped a clanger this week. I genuinely thought that it was bank holiday weekend this weekend. And some clown has moved the day to Friday, threw me well out of whack. Anyway, I digress. So let's have a look and I'll show you what I mean by the journal. So here's my journal, all right? There's nothing up there, so there's nothing to see there. And this tells me everything I need to know. And when I look back and when I record my trades, which you see, I have a link in the notes to where that recording is. So if I made a mess of it, I can then go back and have a look at it. And it's dead easy to fill in. So let's just put a starting balance in. Doesn't matter what it is. Say £1,000. All right. So I'll be starting the week on 1,000. Okay. So my balance is down there, 1,000. All right. Put your date in, 1st of May, whatever it happens to be. Then you need to put your bid size in, the size you're going to be running at. Now, this works it out for my building up here. So we'll say your starting bid is £1 a point. All right. And if I achieve target and the compounding, I'll increase it to £1.05, and that'll make sense in just a second. All right. So I'll put that in there. So I'm at £1. Average stop loss, say 30 pips in there. Right. So what this information's telling me at the moment is I'm starting with 1,000. I'm £1 a point and I'm willing to risk 30. Now let's assume that I made 60, all right, just for silly figures, all right, and I went long, All right, if I was short, I'd type short in there. It then tells me that I won. Okay. And then I'll start writing down the moods that I was in. So was I in a good mood? So I was in a good mood, wasn't angry or anything like that. And did I follow the rules of the trade? Yes, I did. So that tells me. And what that is, so if I'm looking in my notes and I made a massive loss, I'll then look at my mood and I'll say, well, was I angry? Was I agitated? Blah, blah. Because this really does affect you. And I often tell you, trading is a mind game. And it is. And if you're out of whack, you'll find that you'll trade from a position of fear and greed, anger, all driven from various aspects of your life. When you're trading, you need to be on point and at the best of your game. And you can't do that if you're angry or if you're sad and you're upset, even if you're elated, because then you feel invincible. And that's even worse because you'll take a bigger risk. You know, so you've got to be a bit careful. Then it's whatever the market is. Let's just say it's cable, just for silliness. And then it tells me, okay, so that 60 quid is 6% of that balance. So that made an increase of 6%. The risk on that account was 3%. Now, part of my rules is I will have 2 day trades at any one time with a maximum percentage of 2%, which means if I had them both running, I'd have a 4% maximum risk against my account. So that is intolerance. That's below 4%. And I'll live with that. But what it means is if I took that trade, I wouldn't have another day trade running because it would mean my risk tolerance would be pushing the limits. All right. Or if I did, I would only risk 1% on that one. Okay. And then finally, it tells me what the risk reward was, and it was 2. So it made 2 times the risk. All right. So that's roughly the anatomy of what that is. Now, the next time that I put this in, as you saw, it's just increased by 60. I will go 105, 30. But let's just say I only made 50 when short, like so. Still good. Yes, and just cable, just so that I don't have to type it all out. Changes the dynamics slightly on this side. Still 1-2. Okay. It's increased the week start by 11%. And as you can see, you know, my risk was a bit less. So my risk tolerance was coming down. Didn't quite make as much. And the reward was 1 in 6. So that's the anatomy of what I'm looking at all the time. Okay. So that's why it's important to have a little journal like this, because it's telling you all the time. It gives you lots and lots of information, you know. And as I said earlier, I'll have a maximum of 4% on my trades. That tells me what my maximum risk will be. So I could go out to £44 in risk. Okay. So there we are. So well within the limits. So it controls you and it helps you. It really does help you. Okay. So I implore you to have a plan and a journal. But this is where it gets all nice and nitty gritty, and it's probably the bit where you want to see, how do I get from being at the bottom with 250 quid to earning a salary in 12 months? Well, that comes from looking at a spreadsheet like this one. Okay. So we're going to run it through and we'll show you how well you can do within roughly a year. And we'll assume you have a couple of weeks off. All right. So we'll take it so you've got a few weeks off. So you start with 250 quid. All right, that's all. And this sheet is just based in a perfect world. You're going to score every time. All right. We all know that you don't, but it's just for example, and to give you an idea of how little you need to do in order to get to a wage. All right. And why did I say how little you need to do? Because I'm basing it on one trade a day. Over trading is an account killer. All right. So look for the best setup and the best absolute market you can trade. All right. So you got to do your homework. You know, look at the markets, look for the ones that are moving, then look for your setup, then drill it down, have another look at it, then enter. One shot, sniper. All right. So you're starting with 250. Okay. And your 50p per pip, point, tick, whatever you want to call it, is your starting point. All right. There's a lot of brokers out there that'll allow you to have a micro account starting with 250 and at 50p a pip. If you can't find them, go on my blog, scruffytrader.com, and there's some recommended brokers there that'll help you. All right. I'm not affiliated with them or anything like that. I just know who they are and I put them on to add a little bit of value to the blog. Okay. So here we go. Right. Week 1. Monday, you get 10 pips. You make a $5. Whoop-de-doo. And I know for a fact that's the first thing that was going through your mind. This ain't getting me no Lamborghini. This is only a $5. Right? You tell me one institution or bank that will give you £5 in one day of 250. There ain't one. All right. So that already is a good return. You have just earned yourself a McDonald's for being a bit clever. All right. So your balance is that. Right? You repeat the process the next day. Same setup, same drill, one trade. But you increase your bid by 5%. That is it, just 5%. So again, you're not stretching the limits. You're not increasing your risk radically. You're just increasing your bid size. All right. And today, you've made £5.25. So not only have you earned yourself a McDonald's, you can get yourself a cake as well, because you've earned a little bit. But the idea of this is never to touch it. Just let it build up. So your bank balance is this now, 260 in 2 days. All right. Wednesday, 551. Thursday, 579. Come Friday, the end of the week, you're now at 61p a trade. You're making £6.08 on each one of those trades. And you have made £27.63 in 1 week. That, I don't care what you say, is a colossal return on £250. All right. And you keep on going. You know, week 2, same principle, exactly the same principle. One trade, 10 pips, increasing each winning trade by 5% on the bid. You know, the price per point, pip, tick, whatever you want to call it. All right. And come the end of that week, so in week 2, you now have £312.89. This is great stuff. All right. And you've only been at it 2 weeks. So you keep on going. All right. And now, after the 3rd week, it starts getting a bit interesting, because now you're making £45 a week and your balance is moving up pretty quick. Okay. So we're going to span it out now and we're going to speed it up to 12 weeks. Okay. So here we go.
You've been in this now 12 weeks, 3 months. All you've been doing is increasing your bid size by 5%. And the balance on the other side is increasing a lot quicker. Because as you can now see, after 12 weeks, you're now generating over £400 off your trades. Yes, your risk tolerance is high. There has to be a trade-off. And when you're trying to build an account quick, that is the trade-off. The risk is high. But you offset that by trading once, because over trading is a killer. You've heard me say it many times. And you're only looking for the best setup. And I know you'll also be saying, well, it's a £2,000 balance. Nobody's going to let me trade it. At the moment, it's 8.89 a pip, point, whatever. Well, you can, and I'll show you now, because you're not tied to one market. You can trade anything you like. I mean, I trade all sorts. Yes, I trade currencies, pretty much just the majors. But I trade gold, I trade oil. I have ETFs that I look at. I look at gold miners ETFs. I look at FTSE trackers. And I also trade coffee, because we all know Scruffy likes a coffee. But I do. I trade London Robusta. It's a steady market and gives me half decent returns. So there's lots of markets you can choose. So you're not tied to one market. And I'll quickly give you an example. Let's have a look. This is Ripple. Okay. Let's have a look. There's the deal ticket. You can go £10 a pip. All right. You need a margin or an account that has at least £111 in it. So if you've got a £2,000 account, that is as much as you need. Okay. So it's not out the realms of possibility. Well, let's have a look at another market. I trade gold. There's gold. Let's move that out the way. Let's have a look. What were we saying? Say £8 a point, £9. We'll go £9. £9. I'm going to buy it. Set the level. I need £765 in the account. So you can do it. It is very easy to find positions at that level for that account balance. Okay. So we're going to run it forward again. So we're at 12 weeks. We're going to take it to 6 months, 26 weeks. Okay. Here we go. In 6 months, you're now generating £500 a week. You've capped your bid size at £10, and you'll have capped that quite earlier on. All right, which is here, week 14, you would have capped at £10. All right. And the reason why you cap your bids is to help your mind. Because when you're at £10 a point, the emotions kick in wildly. All right. And that's something that you don't want. So cap your bids till you get your account to a level that it doesn't become uncomfortable anymore. And because it's capped, as your account is going up, your risk is coming down. So that trade-off is now starting to go like that. Okay. But you've got a decent amount in the bank. You've now got £9,000. You know, bearing in mind, in the UK where I live, national minimum wage is around 12,500 a year. So in 6 months, you're almost at national wage. Okay. But as you're growing, and as you can see, the account is growing with it. This is all fixed. It's not increasing anymore. All right. We're going to take it out to the end of the year. So that's week 48, because you're having 4 weeks off. All right. Let's take it down. There we are. Week 48. You have hit 20 grand, 20,000. That is a good salary. All right. Certainly better than stacking shelves in a supermarket. All right. So that's kind of the anatomy of how it is. But I know a lot of you ask, why do I scale? Why do I have certain target points? Well, I'll just quickly go through that, and I'll show you a little example as to what it gives. The first reason I scale is it reduces my risk. And this is an age argument a lot of traders have had. Said, no, you're at full exposure at the point that you go in. Yes, I am, but so are you. All right. If that moves up and it pays me, it's reduced my exposure. Whereas trader one at full points is still at risk because he hasn't got near target, but I've been paid. I go to my next scale point, I've been paid again, and I've reduced my risk exposure. They're still at full exposure and they're still in the market. I'm not, but I've been paid. When it gets to the next scale point, I'm probably at break even at this point. I've already been paid and I couldn't care less what happens afterwards. Whereas the other trader, still at full risk exposure, still at the mercy of the market and hasn't hit target yet. You kind of see where I'm going. You know, all I'm doing is I'm protecting my account and I'm being paid while I'm doing it. That's the theory behind my scaling. All right. Well, let's have a look at something else. Same account, 250. We're going to have 3 scale points. All right. We're going to scale it at 15 and we're going to scale it at 20. Okay. Same position, 1 trade, same bid, but the bid will be broken into 3. So we're going to break that bid into 3. Now, we made at the end of the year 20,000, right? Just showing you, all right? Yes, ideal world before the arguments, and I get it in the neck because I do get the emails saying, nah. Well, bollocks to you. This is ideal world and it's just an example, all right? The 2 points we looked at, week 2, we're at the same, all right? Then we went 3 months out. Let's have a look, see what happens at 3 months. We are at 2.5 grand, whereas before you were at 2. Okay. Same bid size. All I've done is I've just broken the bid up. You know, just divided it by 3 and then put some targets in. Okay. Then we went to 6 months. 6 months. There we are there. Remember, you're at 9 grand, nearly national wage. This is 13 and above national wage. And I'm still trading the same size. All I've done is I've scaled out the amount of points I'm going to get. All right. And they're going to pay it and pay. But 20 points is still in the realms of possibility. You know, you trade cable or anything, moving 20 points in a day is nothing. Okay. And then we'll run it out to the end of the year, which is week 48, which is here. And instead of having a salary of 20,000 a year for doing absolutely no different than what you were doing, you have a salary of nearly 30,000. And that's the power of scaling. It's the power of compounding. And it's just a benchmark of how I try and get to a salary.
So that was that. And I hope it did genuinely try and inspire you to think that this can be a job. And if it has, please smash the like button, subscribe and share. And if you've got a question, just drop it in the comments below and I'll genuinely do my best to help you. Because ultimately, why do we do this? Well, for me, it's simple. It's this. You know, my family. If I work hard and I perform, I know that they're going to have a good life. And that's all life is about. It's just being happy. And if you're happy doing your job, it doesn't get any better than that. So I'm going to leave it on that. And remember, guys, do what you love, and the money will follow. See you on the next one.